Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, November 12th, 2021. It's 10:20 a.m. Eastern Time as I'm starting the video, and this video will cover the cannabis sector, the marijuana stocks. Notice after the market opened today, one of my watch lists was flashing a lot of green, so I checked it out. I hadn't really paid much attention to the cannabis stocks in a little while, and I'm seeing a lot of nice setups and some actionable trade ideas right now, some that have already broken out, some that are poised to break out. So we'll start here with, I'm going through no particular order. Actually, I take that back. I do have the list sorted by market cap, so you're going to have your bigger, more diverse, or not more diversified, I'm sorry, more established companies in the beginning of the video here, and it's just keep that in mind as we go down the list. You get into the smaller and smaller companies. That means higher risk, less liquidity. There's nothing wrong with those. In fact, the most explosive gains tend to come from those smaller companies, but you need to beta adjust your position size. You take a much smaller position in those higher risk stocks because, again, your gain and loss potential is higher, and you need to use wider stops if you're targeting, let's say, 30, 40, 50, 100% rally in one of these stocks. Then you can easily afford to use a 10, 20, 30% stop loss, and without getting wiped out. You just take a small enough position that in dollar amount that 30% stop loss isn't going to hurt you too bad. All right, starting out here is ZYNE. This one's not a pure play cannabis. It's a pharmaceutical company, but related in that sector. They must have some cannabis-based products there. It's in my watch list for that reason. I've covered this one quite a bit in the past. And here's what I see. Most importantly, you can buy it now at trendline support. A nice trend line that comes off the March of 2020 lows, those COVID lows. And this thing's been stair-stepping up. And then you also, if you want to wait, play it safe, more conventional or conservative entry would be a break above the downtrend line. So you got a nice clean downtrend line right here off the February highs. You had this buying climax back here. Parabolic move, those never end well, and that's usually what happens. You go up sharp like that, and then you come down just as sharp. That's typically what happens in one of those ramps. Either way, it was a key reaction high, and again, you have just this nice clean triangle pattern right there, and you're at the apex. It's going to break one way or the other soon, and based on these positive or bullish divergences right here and the momentum and the setups I see in the sector, I favor upside. I'm going to say this as I go through the video. This video, being that I just noticed the sector today, many of these charts I have not updated in quite a while. A lot of these levels were old levels that were on here. This one, let's see, did I do this today? Some of these I have updated. No, that one I last updated. I created that line back on September 23rd right there. So these are old levels from before, but as I go through the chart, what I'm getting at, I'll look at it. If I see any other levels or adjustments I need to make, I'll do so. So on this one, that's it. Break above the trend line. If you want a price level, I'm going to say 416. Let me put a line there because there's a little bit of minor resistance. You zoom in tight, see how we've been bouncing along 415, 414. So that should do the trick right there. And you'll also, of course, have taken out the trend line. So first target is 472, but I'm going to lower that right now for you down to, and I'm giving you actual resistance levels. So you want to sell a couple pennies below that. About 463. We can call it 460 to be safe. I'm going to leave it at 463 because you have all these recent reactions around that level, and that would give you, from a breakout above 414, you'd be looking at about 11.5% gain. And then the next target all the way up around, I'll give you a midpoint target in between about $5.37 and then $6. So let's just say at this time, if we get some momentum going, my maximum target at this point in time would be $6. But right now, let's just focus on see if we get a breakout. And I'll do an update if these stocks continue to break out. Those that haven't already broken out, I'll certainly give an update on the sector. Next one up, Hexo Corp. There's a nice clean downtrend line, nice divergence line. You can see I haven't updated that. It had divergence there. That divergence has continued to build, and divergence is not a buy signal, so that wasn't a buy there. But it is, what is a buy signal is a breakout above resistance. And so this one just broke out yesterday, And again, it's not too late. There's that's an old line. Let me see, 183. I think that one was. Let me move that line. That really was support there, and we just popped it. We're not clearly above it. We just ticked down to 169. That's where resistance is. From there, I see some minor resistance, but I'm just going to hold out for this backfill of this, or I'm not a backfill, a move up to that gap, 260. That would be your target. I think if you take it, either the breakouts are going to fail or not fail. If they don't fail and they stick, I'll just tell you, if you want a shallow target, I know some people don't like going for these big, 20, 30, 40 plus % moves. That'd be a 51% move. And again, that's $2.60. That is the gap right there. And by the way, it's not just gap resistance. It's the bottom of the gap. It's also very good. It was very good resistance here. It was a trading range right there. And so that's a big level. So that is right now the preferred swing target, 260. Aggressive, of course, but just set a stop in line with whatever if you want to take a smaller price target, nothing wrong with that. You can use a tighter stop. Otherwise, use a good 3-to-1 or better risk-reward ratio in determining your stops. All right, another one in the drug manufacturing, specialty, and generic sector is XXII 22nd Century Group. Story on this one, we've been building divergence for quite a while now. And again, I'm updating this one today. So it broke below this support right here, but it's kind of been chopping through it. It's not a solid break, and it's down today. It's at 270. I have the support line around 288 is where it should be. You can see that's where a lot of those candles go. So what you want to see on this one, and it'll probably happen if the sector, continues to exhibit bullish price action. In other words, if we get more breakouts on those that I'm about to show you that have not yet broken out, and those that have broken out, you want to see those breakouts stick. A lot of the ones that I have breaking out have only broken out marginally. They broke out yesterday, some of them today, and you want to see that continue to build. And on this one, what you'd want to see is a recovery back above 288, and especially then a break above this recent, you have resistance here at 326. I'll say that's also a target. If you want to play this in anticipation that it's going to hold and recover that level, that'd be a 20% rally just up to 326. So I can tell you it would be an aggressive trade to take a shot here, because there's really no buy signal. In fact, it's breaking down, so quite aggressive. So if you do that and that's your thing, then take a shot at it and keep a relatively tight stop, because if the breakdown sticks, it's probably coming all the way back down here to $2, and then the divergences may get burned through, etc., etc. So, or you want to play it safe, wait for recovery back above 288, or a little of both. Tiny little shot here, fractional position, and then add to it if it takes out 288, and either target that 326 or the downtrend line, which would be my second target. Third target, is $4. OGITO, a lot of these because obviously marijuana is still illegal at the federal level. These companies are mostly based in Canada, so you're going to see, and I'll do a lot of these. I have in both the Canadian symbols. This .TO means it trades on the Toronto Stock Exchange, but I also have the U.S. shares, which I'll get to in a second. But I do know there's a lot of Canadians that frequent the site, so I'll cover these. This one, you had support there, but again, it's kind of meandered on through it. It's not an impulsive breakdown, so I'm going to put a different line right here. You have support right there about 272, and you have divergence building too. You can look at it this way. So if you do that way, you have a downtrend line right there and a wedge. That's a bullish falling wedge pattern. So it doesn't need much. Probably what would do the trick, I would think, is a break above. We had a little false breakout the other day. See that? It looked convincing. We fell back down below. So you want to play it safe. The want to play it safe number to me is about a break above 312, let's say 313 now. Why? Because that's these two recent reaction highs, and so if we do that, we'll clearly be above the trend line, and we'll have taken out those two previous reaction highs, and this one should be good up to about at 362 level right there. CMED, nothing on there. MJ, and this is important. This is the sector ETF. This was the first to market cannabis ETF. MJ, and so you want to always confirm that the sector looks bullish, and that's, how do you not like that? Look at that, how well defined that downtrend line is, and the divergence has just been building for quite a while now, and this one broke out. There was a little false start right there. See that? Here, I'll zoom in for you. And back tested, and then boom, moved up, and recently took out that high. So again, constructive looking sector, just sharing trade ideas. Pass on them if they're not your cup of tea. The cannabis stocks move fast. They drop hard when they're going down. They are prone to whipsaws sometimes, but as of now, one of the better looking sectors. Oh, and by the way, guys, I've always said this over the years trading these guys. They march to their own drumbeat. They typically have very little correlation with the broad market. And in times, in fact, quite a few times, I've seen the broad market in correction mode, and people flock to these, maybe for that reason. But there it is, MJ, the ETF. I have not updated these levels in quite a while. You can see back, it's been at least a few months since I've updated these, but I think that's still a resistance level that's likely to come into play. I'm going to take this line off, make this simple, so I don't give you too many lines, too confusing. First target, 1577, 1695, 1750, and then 1878. If we can really get some momentum going, I'm going to take that line off now. So those are your targets. Cara Pharmaceutical, another or therapeutics, another biotech company with some cannabis-related drugs. I don't see a lot in here. This one was very bullish on back here a few years ago, and we traded it mostly long, caught the top, traded it short after the wedge breakdown. But right now, no, I don't like it. I'll just tell you, it broke down. It just back tested this trend line. It broke down. It's at support, so you can make a case to step in. It's a little below it. It'd have to recover 1629. If it doesn't, 1444-ish. Again, I haven't updated these lines. I'm going to update that one now. But let me move on since it's not one of my favorites. HEXTO, did I already cover that one? Yeah, I covered the U.S. shares. Here's your Canadian shares, trade on the Toronto Stock Exchange. There's your breakout. And I like to look at the Canadian ones as well, because that's the pure play. That's the actual company. When you see the U.S. shares, they're derivatives of the company's main shares, Canadian company listed on the Toronto Exchange. And so I like to see both, especially the Canadian shares breaking out. Usually the charts are going to mirror each other pretty closely. But there it is. That one broke out, 260, and then 337 would be the bottom, roughly the bottom of that gap right there that I'm targeting. ACB, this was the first official trade idea ever on right side of the chart. There was a penny stock at the time. We started buying this one at 55 cents, and it went up to almost $20, and I was extremely bullish both fundamentally and technically. But that was way back when. That was going back to 2015 or well, actually before that. It's got to scroll back longer than I can go back on this chart. But been in and out, and last time you can see we had a divergent low there. It's simple stuff, and this thing is trades well to the technicals. You have that little bullish falling wedge, boom, quick run. You had another downtrend line with positive divergence, boom, breakout, and ended with another thrust up. Peaked here at resistance, came down. All right, so forget about what's happened. Now let's just look at what happened back then. Let's look at what's happened recently. Little bullish falling wedge pattern right there, positive divergence, broke out, but really didn't go very far because it's been testing this 785 resistance level, and we're right on it right now. It created that line back in 2020. I haven't even changed or updated that line or touched it since July 13th of 2020. So it's a level that was coming into play back here, and still is coming into play and has since. You can see, pull back to it, support, you break it, and then you drop, and then you recover it. That's bullish. Test, breakdown, stayed below it, and we've been trading below it. So this is it right here. This is what I see. Nice basing pattern right here. bouncing between 632 and 785 for a while. So there's your magic number. And is it above it now? Yeah, it's 791, but not by a wide margin. So, that's why I think there's still room. If the sector's going to run now, it's not too late, even though a couple of these have broken out yesterday. But I want to see the majority of these break out. Birds of a feather flock together, and these cannabis stocks tend to run as a sector. You guys already know my outlook for the broad market, which is not exactly bullish. If anything, it's pretty darn bearish right now. So therefore, I'm trying to give you some ideas to maybe hedge some long side ideas, and it's getting harder and harder to find long side breakouts that aren't failing. I threw out a few longs recently. One of them broke out at, what was it, the QUBT. Had a heck of a run. My profit target was a little aggressive, and then boom, pulled back, and it's back testing. There's been a couple others. But the point is, they're starting to sell into breakouts now because the broad market, the overall major indexes are starting to deteriorate. We have sell signals on those as of earlier this week. And what I'm trying to get at here is, yeah, these guys usually do their own thing, but there are no guarantees. If you see a broad-based sell-off, these guys could come under pressure. So enough of that. I just wanted to kind of throw out the fact that I'm cautiously bullish, and there's a little more work that needs to be done. So let's just say with ACB, for example, it popped the 785 level today, but so far it's come back down. It's at 788. So for all intents and purposes, we're right on it. It's not a breakout. It was a false breakout so far, but it hasn't failed. We're pretty much on the level. So what do you want to see? I think if we can take out today's high, that should do the trick. That means the breakout should stick, and that high is 818. Targets, I'll have to get back to you on this one, but I will say right now, let's just say if this breakout sticks, I think we can swing this one up here to about 1030 would be a minimum. And first, and let's just say only target right now. And that's plenty. Get in, get out. If the sector really starts to firm up, maybe I'll extend some targets. But that's about a 30% gain. If you get a 30% gain, and on ACB, this is the nature of this beast. If it's going to happen, like last time it happened, that same thing, it happened in, what is that, breakout 1, 2, 3, 4, 5, 6 candles later, a week. It took about a week to get there. You get 30% in a week, and you can't make a screaming case to stay in this sector, take the money and run. We can always go back in. GRWG, Grow Generation. Again, this one I haven't updated in a long time. You had a major reaction here, and that's it. About 2193-ish is your support level. We've been dancing on that recently. We had a nice little wedge here, and what happened? The stock broke out. But why didn't it go anywhere? Well, because the rest of the sector didn't. As I said, I know this sector well. Birds of a feather flock together. This guy isn't going to break out and run up, 100% if the rest of the sector is not rallying. So far it broke out. It's held the breakout. It's just moved sideways since. It started to go the other day, kind of petered out here. And so again, just a little more. The sector needs a little more confirmation. And again, what does that mean? Those that I've covered so far and those I'm about to get to, breaking out or clearly putting the recent breakouts in the rearview mirror. And so that's that. Probably get a little stop here. Let me give you a midpoint target there. 28.24 and then 33.30. Those are your targets right now. CRONTO, again, Kronos Group, Toronto Exchange, Canadian shares. Boom, that one broke out and didn't even hesitate to hit that first target. There's a line. I created that line back on September 23rd. Saw these wedges forming. So, they were on my radar recently, just not in the last week or so here. And so, boom, it broke out and hit what was and would have been my first target had I shared this as a trade idea. Pulled back, but that's normal. Break out. You get a reaction on the first target. That's why I list multiple targets. And now another thrust up. Next target would be 885 and then 969, 1037, and 1135. And again, these are old levels. Well, not very old. I've updated them a couple months ago. I must have got to this chart and went through and added all those levels there. So that's it. Let's just say this one has the potential to go all the way up there to 1135. And that would be about a 53% run from where we're at right now. And there's the American shares. All right, so would have already hit my 668 target that would have done around the same time. No, that was this line actually created this line back in November of 2020, a year ago. So a year ago here, it was a key level, and I added that line there. And look how well these things play to the technicals. A year later, without me touching that line, it came down, broke that level, broke support, back tested, back tested, back tested, failed, couldn't get through it, fell down. But then, just recently, again, this is the bullish developments that I'm talking about. We had a bullish falling wedge, nice clean one too, positive divergence, breakout, hit the first level, my first resistance at 598, pulled back, and then boom, ran up, took out the second resistance level and hit the third one, 668 to the button, boom. So that line, let me adjust this line for you. That needs to come down here, and I'm going to give you one more level. I'm going to take this old line here. Here are your targets now. Next one, $7, we'll call it 704, and then 774. And if things get really, really going on this sector, I don't, it's possible, but you know me, after being bullish for many years early on, back before it was even legalized in Canada, after legalization and the peak there, that's when I talked to you guys on the site about a major, pretty much a major top, and being longer term bearish on these guys for many reasons, including but not limited to the fact cannabis is easy to grow yourself. Go to Amazon, get a kit, and also makes it easy to be distributed outside. The countries are taxing, and the states here in the U.S. are legalizing this because they know it's here to stay, and they might as well get taxed. And it's also been demonized by some people, but it's not like cocaine. It's obviously not as addictive. And therefore, where I'm going with that is the case that I made back here was, they see big tax dollars, tax the heck out of this, but it's going to be easy to continue to have cannabis grown and distributed outside the legal sources, and therefore there's going to be that competition or pricing pressure. They may grow it more efficiently at a lower cost in these huge indoor facilities, and I've heard Colombia is going to be a big place going forward, outdoor. But again, when you slap the big taxes on it, like you have on cigarettes here in the U.S. and gasoline, things like that, then all of a sudden it's not as competitive anymore with the street growers' products. So anyway, that's it. So I just wanted to say, I know I'm rambling. I'm just telling you fundamentally, these to me are trading vehicles now. They're not buy and holds. If that's because I know some people might be thinking, oh wow, Kronos, maybe it's going to go up and eventually take out the hold. Maybe. Maybe not. Eventually it'll be legalized here at the federal level in the U.S., and then these Canadian companies are going to have more competition. So I don't know. I just get in, get out is my thing with these guys. So there's your targets: 704, 774, 919. Let's just keep that 919. Let me lower it a little lower. Come in here. $9. So I'm going to just mark that as a reminder. That would be my maximum target. And again, that's an aggressive target. It's a big target, 54% gain. There's nothing wrong with taking partial or full profits at any of these earlier targets. Or again, if these even play out at all, maybe they peter out, and I'll do an update in the next week or so. I'll tell you, hey guys, the breakouts didn't materialize. But if they do, one option too is to as you get close to a target, just raise your stops and let it run and hold out for that. And again, just look at this. Don't think for a second that target is you might consider it aggressive, but look at the nature of this beast. Just measure any of these runs previously, and that 50-something% run is dwarfed by a lot of these previous rallies for years. Not just, I'm not trying to pick any particular one. So hopefully that you understand that I always say I call it the know your security rule. Every security trades different, has different characteristics. They have different gain and loss potentials, and that's again the nature of this beast to have these big runs. So that's why I'm doing the video. CGC, Canopy Growth. Look at that, nice. Look at that clean downtrend line. Evening star doji, beautiful topping pattern right there, topping candlestick. got you, would have got you out of there, or got you short that one at the time. But since then, it's come full circle. Correction, beautiful downtrend line, beautiful positive or bullish divergence, especially at the low here. Breakout that didn't go anywhere, but then it back tested. Sometimes you break out, never look back. Sometimes you back test, and that's exactly what happened here. Breakout, back test, boom. I'm going to move this line up now and tell you right now, this one needs to pop the recent highs, about 1450. I have the line at 1448, and that should do the trick, because you can see that's really been the ceiling recently. Targets, I'm going to pull this one down for you, give you a target right here about 1675, and then I would say 18, and then maybe let me even take this out. Let me keep it simple so I don't give you too many targets. Maximum target at this point in time, that would be 2240 right there. Tilray, TLRY, often a crowd favorite in the sector. Nice bullish falling wedge, nice positive divergence, and like many others, recent breakout. Breakout was impulsive the other day, see that? High volume, big move, and I'm going to move this line up right now. In fact, I'm going to put it right here. That's what I like. And see, it popped it intraday. 1255. We're almost at, we're a little lower, 1220 right now. So like so many others, pretty much if you want to be safe, a break above today's high should do it. And then this one, yeah, I'm going to give you, I'm going to pull down here, add a target. 1395, so a little shy of 14 would be your first target there. And then you come in here around 1530, and maximum target at this point in time is going to be about that 2143. Let me just color that up. Again, max target. IIPR, this is a REIT. I think they rent to cannabis related companies. That one actually looks bearish. Almost every time I do this video on the cannabis stocks, this one tends to look toppy. But again, it's a REIT, so it's a whole different thing, and we'll just move on. Weed.to, Canopy Growth, breakout right there, bullish falling wedge. I'm going to move a little faster so I can finish it up here. OGI, Organigram Holdings, nice downtrend line, recent breakout and a current back test. You could go long on the back test or wait until break above the recent highs. I'm going to pull this line down here. Let me pull this one down. There's your level right there. It needs to pop 249, or you can take it on the back test, swing it up to 249. That would be we're at 231 right now. If it gets up there again, that's about a 13% gain. I'm gonna move it a little higher. It's closer to 250. Yeah, that's resistance. So targets are 250, and then yeah, about here, about 275. Let's just leave it at max target 331. So I'll color that up. Pattern projects to that possibly there. 330, call it 330. CGRW, getting down to little, see these candles, how they're wonky? It's because the volume's a lot lower in this one. This is a penny stock, to say the least. It's 6.5 cents a share. MCOA. I'm going to stop here because we're in penny stockville. Not that these guys won't run. They tend to move with the sector, but you have a higher risk of loss. Any of these companies can suddenly come out and declare bankruptcy. But there it is. That would be a target up there. The 100% return on your money if that target's hit. Breakout is above this trend line, so I'm going to set an alert for myself. And the target is 4.9 or 0.49 cents, 0.0049. That would be your target there on that one. And I'm going to stop here. You go down the line, they're just getting smaller and smaller, and some of these have already gone to the wayside. When I go through my charts, means they've already been delisted. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.